This episode of Financewize is sponsored by Sanlam Namibia Holdings. Hello, and thanks for tuning in to Financewize, the show that empowers you to make informed decisions about your money. I'm Dantakas Jimmy Malani, and in today's episode, we'll be looking at the concept of insurance. Insurance is basically all about covering and protecting yourself against risk. When you take out an insurance policy, you are basically protecting yourself against the negative financial impact of something specific, risk, happening in the future. When you insure something, you ensure that you won't suffer a big loss if anything happens to that thing. And an insurance policy is therefore a contract between you and the assurer, such as Sanlam Namibia, binding them to pay out certain financial benefits at a later stage in return for your regular premiums, installments, or payments should a specific risk event take place or at maturity. You therefore pay a predetermined premium to an assurer in order to cover for the theft of your TV, the loss of your eye, or even the loss of your precious life. In return, the assurer, such as Sanlam Namibia, promises to pay out a certain amount of money should this event occur. Now let's see what ordinary Namibians have to say about insurance.
What is long-term insurance?
Long-term insurance. No, it's like the term itself, long-term. It's a long-term insurance. An insurance that will take long-term. You know, it's a long-term, like maybe life cover or something like that.
Long-term insurance is when you invest for a period of longer than 5 years, like maybe if you are saving for a house or something like that.
Long-term insurance is like funeral loan.
What is short-term insurance?
Short-term insurance is you insure your car or a house.
Yeah, short-term insurance, which we are talking about being on the secure side, especially whenever your house, somebody breaking your house, and then maybe he steals something. But then at the end of the day, this insurance can able to cover you. So everything will be covered, and then at least you can able to survive.
Do you have any insurance?
Yes, I do. I'm not sure if adequate, but because you can never have enough insurance, but there is some level of insurance.
What are you insured for?
Well, house, personal belongings, generally that, and business. Yeah.
Short-term insurance, anything covering the period less than 5 years. Regard that as short-term insurance, a year to 5 years.
Do you have any insurance?
Yes, I do have insurance on my life and vehicles and my household, everything.
Short-term insurance to me, I must say, this could be the one that is attached to the movable properties, like maybe a car, because that could only take some few years. Yeah.
Do you have any insurance?
I do have both for my car and both for my car and also for like other investments and life insurance as well.
Let us say you use the money you have inherited from your grandfather to buy yourself a nice second-hand car priced at 50,000 Namibian dollars. You are at risk of that car being stolen or written off in an accident. Poof, there goes your 50,000 Namibian dollars. You may be smart and immediately start saving 500 Namibian dollars per month against the risk. It might help a bit, since after a year you might have 6,000 Namibian dollars, but still very far from the loss of the car worth 50,000 Namibian dollars. There is, however, a better way: insurance. With insurance, the assurer takes your 500 Namibian dollars per month and takes over the risk of your car getting stolen or involved in an accident. If stolen, they will pay you what it's worth, and if involved in an accident, they will have it repaired for you. Have you ever wondered where insurance actually came from? Who were the first people to be insured and why? Well, in the next training clip, we look at the history of insurance in more detail. Insurance is one of those things we tend to take for granted. It just seems to have always been there. The history of insurance is an interesting one, but the basic idea has always been the same. Around 3000 BC, Chinese merchants traveling treacherous river rapids practiced the first method of transferring or distributing risk. They would redistribute their wares across many vessels to limit the loss due to any single vessel's capsizing. Later, in Babylonian times, around 2100 BC, the Code of Hammurabi was the first basic insurance policy. This policy was paid by the traders in the form of a loan to guarantee the safe arrival of their goods by caravan. Of course, the caravans faced the same kind of perils as our transportation industry faces today, like robbery, bad weather, and breakdowns. As history progressed, the need for insurance increased. The Phoenicians and the Greeks wanted the same type of insurance with their seaborne commerce. The Romans were the first to have burial insurance. People joined burial clubs which paid funeral expenses to surviving family members. In medieval times, the guilds protected their members from loss by fire and shipwreck, paid ransoms to pirates, and provided respectable burials as well as support in times of sickness and poverty. Now that we have some background on the history of insurance, let's look at how and where it evolved to today. In particular, it is very important to understand the difference between short-term and long-term insurance. We shed some more light on this in the next training clip. Short-term insurance is insurance against an event that may cause financial loss to you should something happen to the insured thing. You take out short-term insurance on possessions such as your camera or your car or your household goods. It is insurance that you can cancel either when you dispose of the insured article or no longer wish to insure it. You can identify short-term insurance by using the conjunction if. For example, if my camera is stolen, if my house is broken into. The conjunction is usually used for things that may happen or may not happen. In the above examples, your camera may be stolen or may not. There is no certainty of the event happening. Usually, with short-term insurance, there is no investment and no saving, meaning that the premiums you pay are only to cover against risk. If the risk you are covering does not happen, you have no claim to the premiums that you have paid. Things such as car accidents, theft, legal liability to others, breakage, damage caused by fire, and a range of other things can be covered by short-term insurance. Long-term insurance, on the other hand, is insurance that you would expect to pay over a very long period of time until you die or until the policy matures. For example, at a specific age. Traditional long-term insurance can be identified by the conjunction when. For example, what will happen to your family when you retire? The conjunction when is linked to something that is certainly going to happen. It is the brutal truth that we are all going to die one day and that we are also going to retire should we not die first. Long-term insurance further looks at could. You could become disabled in a car accident. The thoughts of what might happen when you become disabled, make one consider taking out insurance cover against this risk. Long-term insurance is an investment, since at some point in the future, you or your next of kin will receive the benefits of this policy. This, however, is fast changing with the new products such as trauma cover, disability cover, etc. Long-term insurance cannot be bought as easily as short-term insurance. Sanlam Namibia Holdings is offering one lucky viewer an awesome prize, a BlackBerry Curve cell phone. All you have to do is complete the Sanlam Namibia Holdings slogan. Thinking A, about money, B, ahead, C, about livestock. SMS FW followed by your answer A, B or C, your name and your age to 62221. That is 62221. Do not miss this opportunity to win yourself a BlackBerry Curve cell phone. The winner will be announced during the next Sanlam edition of Financewize. We spoke to an executive management team member at Sanlam Namibia to better understand the benefits of insurance and the different types of insurance risk.
My name is Evan Simatan. I'm the General Manager of Public and Corporate Support at Sanlam Namibia Holdings. Dying too soon or dying suddenly before your time can indeed be considered a risk. When you are still young, you don't have enough savings. You may also have lots of bills and debts not yet settled. Imagine if you have children and spouse who are financially depending on you for their upkeep and their education, and you just die suddenly. This could spell financial ruin for them. Your family can be ruined forever financially. Many people really wonder why living too long can be considered a risk, as most people would want to live for a very long time. In Namibia, the retirement age for most professions is around 65 years. Now imagine if you live another 20 years longer than that without the income you were used to. Also take into consideration the increase in medical costs and other expenses that comes with old age. If you did not plan effectively for this, it could be a really big blow to you financially. Remember, you do not want your money to die out before you do. Taking out a retirement annuity, for example, can supplement on your pension and allow you to maintain your lifestyle. But if you did not plan accordingly for your retirement, it becomes a nightmare. Becoming disabled can indeed be seen as a financial risk that should be planned for financially. When one becomes medically disabled, either due to an illness or an accident, you tend to lose the ability to earn an income. This also becomes a risk in that despite your disabilities, the life expenses continues.
In insurance, we talk about risks and risk factors, but what exactly is a risk factor? A risk factor may be described as the factor which prevents us from being able to do what we plan to do, even if it's only temporarily. It is that unknown element in our day-to-day living that presents us with life surprises. A student studying for an examination, for example, might become ill before the examination. Getting ill is a risk factor. The effect of surprise elements or risk factors can be disastrous. In the above example, we can handle the setback quite easily by postponing the examination. What about in the case where you are the only breadwinner and your whole family depends on you for a regular income to be able to survive? Should you suddenly die, what would happen to them? Their survival is thus threatened or at risk. Your untimely death in this case is the risk factor that may prevent you from providing for your family. There are 4 basic risks that you should take into consideration when planning for your financial future, which are as follows. You may die too soon, you may live too long, you may become disabled, or you may suffer a traumatic event. In our Career-Wise segment, we talk to one of Sanlam Namibia Holdings professionals for some insight into the work they do for the company.
My name is Isildina Steven. I do claims consulting for Sanlam Namibia. A claim consultant is someone that handles incoming claims. Example, death claims, funerals, rider benefits, which is your dread disease, your disability claims, your trauma. And the clients will come in, they give it in front. It will be assessed by the underwriters and our doctors. And we do the payout once it has been approved, or we send out a letter of repudiation to the client if they do not meet the claims requirements. A claims consultant has to have at least grade 12, and the training is being done at Sanlam head office, and it takes a duration plus minus 3 months. The qualities are a good listener, a sympathetic person, a kind-hearted type of a person. Reason being, we're working with clients with personal catastrophes, and we would like to help them as quickly as possible. When they walk in, we have to show them that we care, we do understand what is going on in their lives. The first thing will be the death certificate if we're talking about a death claim. The certificate being that it's the only type of document that will give us the right to give you information on somebody else's policy. When it's on a rider benefits, let's say for instance a disability claim, the client requires to bring in a letter from the doctor that says that he's been boarded from his work. If he calls in, our client service telephone section will already explain to the client what is required. Death claims, it's the death certificate, ID of the deceased, ID of the claimant if the claimant is a beneficiary, bank statement of the beneficiary, the verification and identification document, what we call FIA. And once all this information are in place, each claim takes different duration to be finalized. When it's a rider benefit claim, for instance, your disability or your trauma, it will take a little longer, but you also have to bring in your doctor's reports. We refer the case to our doctors. They assess the claim. They come back and they tell us whether we can pay. Does the client meet the requirement, yes or no? If it's in order, we pay the claim. If it's not in order, there is a letter going out to the client explaining him or her what are still different informations that is required. So at the go, not all clients will come in with all the informations unless they've called in. So what I've just explained are the basics information that they should bring in.
What's average? Statistically, the average woman will bear 2.4 children. The average child will never go to university. The average university student will receive a higher income. On average, people measure their worth by their income. The average 24-year-old is starting a career. The average 65-year-old is ending one. And if you had just ended your career, having gone to an average school, an average university, got the average job, married the average woman and had 2.4 kids before retiring at 65, then you would be the perfect average. Except for one thing. You're an individual. Financial solutions for individuals. Sanlam. We're thinking ahead. Are you?
We would like to thank Sanlam Namibia Holdings for giving us some insight into the professional careers available at the company. Now that we have explored insurance and insurance risk in detail, we'll look at this important service offered by Sanlam Namibia to its clients in practice. After all, at the end of the day, what matters is the service offered to clients. Sarah is a professional athlete. While coming down the stairs one day, she accidentally slips and breaks her leg. Upon examination by her doctor, he tells her it will cost about 200,000 Namibian dollars to fix. Her medical aid can only pay 100,000 Namibian dollars. She goes to her financial advisor, who tells her her policy can pay the whole amount, including the changes needed to her car and house.
Hi Sarah.
Hey Peter, hi, how are you?
Good man. What is this? What happened?
Oh, I actually broke my leg over the weekend. Hey, it's a long story.
Are you serious?
Yep, I went to the hospital, I took some x-rays, I got some x-rays done, and luckily I got insurance, so they actually covered up for me. Can you believe it? I don't have that much of an expense to pay.
What insurance? Everybody's been talking about this insurance. Do you know what happened?
What happened where?
You know what happened to Jimmy?
No, tell me, what happened?
The guy's house was burned down by fire. The man lost everything.
Oh, you must be kidding. I was by his place only last weekend. How could that have happened?
Do you remember his 3-year-old daughter?
Oh, you mean little Courtney? Don't tell me she got caught in the fire. She's such a sweet, decent girl.
Relax, man, you are now sounding like my wife. She can't handle sad news. No, Courtney was in the house. Actually, she is the one who started the fire. Imagine, apparently, she was playing with candles and matches. And the fire, the curtains caught the fire, and the fire spread throughout the whole house and burned everything down.
Just like that. Poor Jimmy. And where was everyone? And the fire department, those people are useless.
You know those things can happen. Apparently they went to a funeral at their in-laws, and the fire brigade came, but you know Khomasdal and town is too far. By the time they got there, the house was already burned down to the ground.
So what is he saying now?
Yeah, that's the story I wanted to tell you. I found Jimmy in town today, and he seemed quite happy. He just got a new house. Imagine that. He said he has some kind of insurance and they're busy compensating him. He's getting a new house and the contents in the house. Just imagine that. What kind of luck is that?
Peter, that's how things work. It's not luck. I mean, Jimmy got short-term insurance on his house and the contents.
Insurance? I don't believe in those insurance things. These people are just after your money. They just come to you, tell you a lot of stuff, and then they take your money and go.
You are wrong, Peter. Look at Jimmy. Where do you think he'll be without insurance? I mean, his short-term insurance policy is now working for him.
You even know these names. Short-term insurance. What is short-term insurance?
Insurance isn't as complicated as you thought. Basically, there's long-term insurance and short-term insurance. You take short-term insurance on your possessions like your house, your household goods such as your TV and your car.
Okay, that's quite clear. Long-term. What is long-term insurance?
Well, you see, Peter, what happens is long-term insurance is for a long period of time. You pay your premiums until the day you die or the specified event occur, or until the policy matures, for example, at a specified age.
Oh, now I get it. I think I'll take out long-term insurance for my retirement and for my kids' education.
Exactly. You see, Peter, insurance isn't as complicated as you thought. You have to think about getting some policies for yourself and your family. I mean, that's why I got insurance with Sanlam. They're paying out my medical bill.
Yeah, I'll definitely look into it. I'll think about that.
Yeah.
Maybe that insurance thing might actually work out for me too. So what are you going to have?
Oh, cranberry juice would do it for me.
Since we're at the Chinese restaurant, why don't we just eat some Chinese food? I'm hungry.
Insurance is not only a valuable method of ensuring the security of your wealth and possessions, but more importantly, it allows an individual to defend against the unexpected, ensuring his or her family's dreams remain intact. Life is for the living, to the fullest, experiencing the beauty of a summer sunset, getting ahead in your career, meeting the love of your life, watching your children grow up, and spoiling the grandchildren. These are the things we all treasure, yet life is also fragile. One mishap can wipe out everything you have worked for and hold dear in life. And every day, we face so many risks that threaten our well-being. Car accidents, crime, heart attacks, the possibility of retiring without money. That is why you need insurance, so that you can get on with the business of living, not dwelling on the bad things that might happen while you're making the most out of your life. You can't prevent bad things from happening to you. Accidents will happen. People get sick, people get old, and people die. Dreams get shattered. That's life. What you can do is ensure that these events do not spell financial ruin for you and for your family. Please remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to saving. The point of this program is to give you a more tangible look at how a business person or individual might implement the ideas discussed. There are many other alternatives out there, and we strongly encourage you to explore them and see what works best for you. But for the average saver, the smart route includes putting money away regularly, keeping fees and charges down, and being in the market for the long term. Whatever you do, keep the principles we've learned in mind and never stop trying to learn more. This is Dantakas Jimmy Malani, encouraging you to get finance-wise. See you next time. This episode of Financewize was brought to you by Sanlam Namibia Holdings.